Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 6th, 2020. And man, the volatility in the market just continues. And of course, we're in kind of uncharted territory and unprecedented times with everything that's going on with the coronavirus. You know, I wish I had a crystal ball and could predict what's going to happen, but it's just, the market is reacting in a very volatile fashion to any breaking news, and I think people are just looking for, something that indicates, what's going to happen in the future. And I think the market is going to be driven by breaking news, and that's hard to predict. There's early good news out of Italy and France that the death rates have kind of rolled over and are declining, and that's really, really good news. And then, with that, we've also got the expectations from the U.S. government being set that, hey, we kind of got the worst in front of us to come in the next week or two, maybe really tough. So I'm looking here at a 60-minute chart of the S&P 500, and you can see here's the the big decline from all-time market highs of around 3,400 on the S&P down to 2,200. Just a historically rapid decline. There was a retracement up almost into this retracement zone, these two blue lines, and then it pulled back a little bit during last week, and now it looks like it's trying to head up. Here's the overnight futures on the S&P 500, and you can see from the overnight open here to here, it's up over 3%. So there is some optimism, at least in the overnight futures, implying a higher open Monday morning. And I've put this purple line where that implied open is on the S&P 500. And so if that happens, it could continue up. And if the key levels to watch are this prior high right here, I'm drawing a line. If we go through this, and we probably are going to continue up to the 28 to 2,900 range on the S&P 500. Alternatively, if different news comes out and things start breaking down, and it goes below this low, then we're probably going to continue to head down into some new lows. So watch this range here, and that's kind of the best technical forecast I can give, is to kind of watch what happens. And the real trading opportunities right now are intraday. I'm not a day trader typically. I do it once in a while. I like to focus on longer time frames, but the real opportunities are right now with this volatile condition are intraday. And we'll be looking for those, or at least shorter term 1 or 2 day trades. The couple of recent winners we've taken have been pretty short term trades. We are looking for particular instrument stocks, ETFs, that are moving on their own trend and presenting opportunities. We've got a couple trades on for that. But again, watch these key levels, and again, if it breaks through this high, we're probably going to go higher. If it breaks through this low, we're probably going to go lower. Kind of over the last couple of trading session days, it's been in, this is a 60-minute chart, in a bit of a channel, so watch for breaks out of that channel. And back to the futures, gold is up a little bit, and gold is interesting. I think it's got some possibility to go higher. We're watching that. We actually have a gold trade on right now. And oil is interesting. Last week there was a rally, an unprecedented rally in oil, up to $29 a barrel on the light sweet crude futures, up from earlier in the week to being below 20, and that was, that's a huge move. So we're watching energy and oil. There might be some opportunities there. We're watching gold and the S&P. But again, I think the real near-term opportunities are in shorter term, even intraday trades or 1 or 2 day trades, to try and capitalize on volatility, momentum on specific issues. And meanwhile, I think the market's just waiting for news. Any kind of positive news about the curve bending, or are the malaria drugs going to work? There's some studies going on. Any vaccine or antibody solution is weeks or months away. So headlines will drive the market short term as things come up, but it's important, I think, just to watch the charts and to trade the reality. And it's okay to have most capital on the sidelines and then wait for clear direction. Any short-term opportunities, I would be putting relatively small positions in. And if things turn and they lose, we lose a little bit of money, or got the opportunity to make some there. But for the most part, my capital's on the sideline waiting for clarity, and it'll come, and there'll be some good trading opportunities. But that's really it for now. Again, I wish I had a crystal ball, but I don't, and we just have to trade the realities. So, being cautious, keeping most capital on the sideline, taking a few short-term speculative plays, and I think I've given you some insight here, some levels to watch for on the S&P. And the S&P is the big dog. It's 500 of the largest companies in the U.S. You can also trade the NASDAQ, the Russell, the Dow. They're all going to be moving in relatively similar patterns. So that's it. And if things change, we'll do another update. But that's what I have to offer for now. I hope you find it useful. And by all means, leave me your questions, your comments, your feedback. Love to hear from you. Thanks.